Hi, everyone. Thank you for joining us today for our webinar, Use Your Business Analytics to Maximize Profits. Our presenters today are Eliane Tabby and Darren Cantrell. Eli has been working at Just IS for over a decade when he began as a junior developer and has since transitioned into his current position as the Associate Director of Business Intelligence and DBA Services. Throughout his time at Just IS, Eli has driven his team to create cutting-edge advancements in the fields of BI and analytics. Darren Cantrell is a planner at Cavender's, a Western footwear and apparel retailer in the southern United States. His primary focus is building inventory and sales plans for store operations and merchandising. In 2017, Darren led the Cavender's team to a successful transition into BI analytics. He has developed many BI analytical reports that have given greater visibility to KPIs across the company. We hope you enjoy the webinar and don't hesitate to send in your questions. We will be answering them at the end.
So good morning, everybody. As Anna just said, I'm Eliane Tabby, and we're going to be talking about analytics today. Please feel free to send in your questions or comments at any time. I'm going to be cursory glancing through them as needed. But before we start talking about analytics in general, it's important to build a solid foundation about what is analytics truly. Well, analytics is divided up into two different types of categories. We have what we call traditional analytics, which is the collection and gathering of data for analytical consumption, as well as modern analytics. Modern analytics is truly driven by new key core concepts in the field, such as big data, data mining, machine learning, pattern recognition, and artificial intelligence. Modern retail analytics also gives you enterprise-wide visibility, enabling actions that improve product placement, pricing, promotion performance, etc., to really give you a holistic view of your enterprise and all its data. Now, it's important to note, this is a big quote that I'm taking out over here. CNBC reported that out of stocks, overstocks, and returns are costing retailers a whopping $1.75 trillion per year. And this number is only moving higher. It's important to note that how this ties into analytics and why this is important. Now let's go into the evolution of analytics. Analytics has come a long way from where it began and where it is now. You're going to see here a report that really every retailer is going to be very familiar with. These types of reports come out of your receipt printer in a store, and they give you visibility about product performance, maybe associate performance, something like that. It's very there's absolutely no interaction. It's really a data dump. You have to sift through volumes of data to identify a success, a trend, or a problem, and it's really an old way of doing things. Then we have BI analytics as it is today, with the exception of the advent of data visualizations. It's a lot more interactive. Most analytics products today are web-based to allow for deeper interaction, accessibility, but again, it's the same type of report, just the technology is able to bring it up an enhancement. And then we have the advent of more modern visualizations that allow you to understand a voluminous amount of data without having to really go through all the nitty-gritty details. Now we're going to talk about leveraging your data and some of the risks that come with business intelligence or analytic systems. The first is user-based business rules is a requirement, and this goes tying into one of the biggest drivers about analytics, and that's empowering the masses. You have to be able to not be afraid to share your data warehouse, to allow users to go through the data, not only as a consumer, but to be able to create. Analytics in the future of BI itself will adapt to the needs of employees instead of forcing them to adopt traditional approaches to consuming data. And the next biggest risk is going to be collaboration. Every time that you're going to run a product performance report and you see a trend or you identify a gap or risk, a problem within your data set, what's the next thing that happens? Well, that report typically gets exported, emailed around a bunch of times. And by the time you get everybody in a room, your window of opportunity has completely closed up on you to take corrective action and assess and address that need. And the next part of collaboration is going to be the duplication of data and reports. A few implementations I've been to, the first thing that they said is, well, we're going to go through all the reports, but this report absolutely has to be there by day one. And the question why is asked, why do you need this report? There's no rationalization on it. There's no consolidation. It's just a duplication of a bunch of other metrics, and it's because the answer more often than not is because we've had it for 20 years and we're going to have it for the next 20 years. So this type of mentality typically is not led to a good user experience, which is ultimately the end goal. Modern analytics is going to provide you with the means to reduce the noise, filter out all the big hay that you have to go through before you find the needle to be able to drive the next point, which is management and reporting by exception. Being able to have that information that you need to look at pushed to you rather than having to sift through a volume amount of data to find the problem. And then facilitate communication. Collaboration within an analytical system has to be able to provide a means of communication and collaboration amongst multiple users to reduce that risk of sharing a report outside of the system and schedule a meeting. There has to be able to facilitate a corrective action within the system. Global revenue in the business intelligence and analytics software is forecast to grow to $22.8 billion by 2020. This was a statement released by Gartner. Now, what are the driving forces of this? Well, the whole purpose of analytics used to be to uncover problems, and in the current retail market space, if you're not leveraging analytics to facilitate your decision making, you're going to find yourself more often than not regressing. BI and analytics is going to allow you to see your business from every angle. Both traditional and modern analytics provide focus on this. However, traditional reporting examples of this is going to be performance of your location, product, performance of your organization over time, whether you're looking at year over year, quarter over quarter, or perhaps even customer performance to identify top consumers within your organization. But where the real ROI is going to come for the analytical and BI space is going to be modern analytics, incorporating machine learning and artificial intelligence. This is very new in the market space. It's only been spoken about for a couple of years, but it's already made tremendous traction, and the use cases are very, very wide. Pattern recognition, trend analysis, and by far one of the ones that I think is going to be absolutely critical is going to be actionable intelligence, reducing human error. Another great use case is going to be intelligent buys in one click. Now, this is another one that's really come up a lot in discussions with our partners is real-time data, the access to real-time data. And it's very important. In fact, 44% of all retailers think improving their real-time data and analytics is a priority. As there are so many constraints around real-time data, only 17% of retailers actually receive access to this real-time data. This is a report from Boston Retail Partners, and there's a lot of technical constraints around it. The whole purpose of a data warehouse is to segregate the analytical component so that way your transactional system can facilitate and do what it's supposed to do, process transactions, record sales, record inventory movements and adjustments. We're going to discuss how those two are more often being married together now, but real-time access to data is becoming paramount. The days of having a day-old data warehouse are suffice to say, they're long gone. You have to be able to blend real-time data in there. And we think that's where the space is going to end up eventually settling, when the dust eventually falls, is that it's a hybrid approach. You still need the pre-crunched cubes in the data warehouse and all the horsepower that goes with it, but you do have to be able to consume and incorporate some real-time data. Big data is something that has exploded in the namespace. It has been around for the past 6-7 years. People have been talking about big data. It was a fantastic buzzword that came out, and a lot of people, retailers and vendors, have been struggling how to leverage big data. I personally feel that there's two types of big data, and purposes can vary for each one. The first one is that it's a stream that has to be tapped into. No deep dive analytics, you just want visibility into what is being said about your brand. The whole purpose of big data is brand exposure, right? You want to be able to analyze the impact of your brand. You want to be able to analyze trends of topics around your brand. So just being able to follow and dive into that stream to be able to understand what the topic of conversation is around yourself, that's what I would consider to be stream analytics. But there is a very, very detailed use case for mining big data and providing some structure around this structured data. Now, why would you want to do this? This is going to enable you to be able to prevent customer dissatisfaction and increase customer loyalty. By understanding your customer better, you can tailor the customer experience of your retail organization for them, and that creates a connection with your customer that just hasn't been possible before the advent of big data. Data mining comes into play here. Being able to bring in all this unstructured data and providing structure around it to be able to understand what are people talking about, what are they saying about your brand, what are the trends going, what are the conversation. Being able to analyze it is going to provide you a deeper insight to be able to further connect with your customer. And advanced analytics has really come a long way. It can influence so many different aspects of your organization. In fact, advanced analytics are necessary to predict inventory levels across channels that are complicated further by omnichannel fulfillment. The type of advanced analytics that any analytical system should be able to provide you is inventory prediction, basket analysis to understand patterns within purchase patterns with your customers, being able to do suggestive selling to be able to predict what your customer wants to purchase. You know, some retailers that are capitalizing on this and making a tremendous amount of revenue on it would be Amazon is the most prime example. I can't personally recall the last time I went to Amazon and didn't buy two things, one of them being suggested to me. Deeper pattern recognition is able to be able to further capitalize on these trends. And optimizing your store layout. You know, one of the greatest use cases that I've ever had for basket analysis that directly impacted store layout was about 50 or 60 years ago. There was a large grocery chain that wanted to further understand their purchase patterns, and they did a study. And what they uncovered was that whenever a single male enters their store and picks up a pack of diapers, he also picks up a case of beer on the way out. And that was a strong correlation. We call that the confidence was exceptionally high, and that's why almost always whenever you go into any grocery store that sells the two, you cannot get to the diaper aisle or get out of the store without passing the alcohol section. This directly impacted product placement, so that way by passing through it, it increased what sells. And this will also enable you to understand what isn't selling well as the eventual goal, reducing that inventory surplus, especially at the end of the season. And now we have the next steps of business intelligence and where we're going. Artificial intelligence and machine learning algorithms and analytics have come a long way. Unlike big data, which took a little bit of time for the dust to settle down and pick up the use cases and implement it properly, artificial intelligence and machine learning has had a direct impact in analytics, and products are already being driven by these components. We could talk about suggestive pricing or suggestive selling, how artificial intelligence can further assist your seasonal demand exit strategy, being able to help you with intelligent purchasing decisions, which will eventually reduce inventory surpluses, being able to predict inventory levels so that way you can plan events and promotions more accurately and make sure you're well stocked for those events, or even something as complicated as price optimization to avoid leaving money on the table. Smarter pricing decisions through price monitoring and alerting sell your right product at the right price. This is where artificial intelligence and machine learning, I feel, is going to make a big space in analytics and how it relates to retailers. And now a little bit more on collaborative analytics. Collaborative analytics almost facilitates a workflow through your analytics engine, right? The purpose of collaborative analytics is to increase productivity, widen that window of opportunity to take corrective action, and completely stop missing out on trends that you can capitalize on. Now, when we're talking about collaborative analytics, I'm not talking as something as simple as a messaging application. We're talking about facilitating notes and comments, both on any attribute of your product, of your location, or even on an event. This product was sold on this price at this time. You can comment on that and send out notifications to other users in the system. Being able to flag certain items, flag a customer, flag a method of payment. We're going to discuss how analytics has really impacted transactional systems as well, and how they're being closely more married together. But collaborative analytics and all these means of communication, almost acting as a transactional system in its own right, has really been able to increase the effectiveness of analytics within your organization. Advanced analytics, right? While advanced analytics are valuable for almost all areas of retail, and truly they are the most critical for replenishment and customer personalization. This is another quote from Ken Morris over at BRP Consulting. Actionable analytics and advanced analytics, these are the areas that we're going to capitalize on them for. And the reason for that is these are the areas that retailers traditionally struggle most with, especially with seasonal goods, not necessarily basic goods. And ultimately, the goal is improving that customer personalization and that customer experience. That is what is going to drive brand and customer loyalty with your organization. And Advanced analytics is going to give you insight into so many trends of your customers, of your product placement, that the room for improvement is definitely there. And actionable analytics, this for me is by far the area that is going to improve analytics as a platform. It's going to introduce automation that has never been capable before. Leveraging analytics to make better decisions is always going to be better than anything that's built in out of an OLTP or a transactional system. It's going to reduce human errors with a seamless integration. Now, what do you want to do with this data that you have? You have this voluminous amount of data, and you're doing something as simple as, let's say, a price markdown. So once you build up your style candidature, you're going to filter in on the basics, right? Your KPIs, your sell-through percent, and you're going to filter in through your weeks of supply, your product hierarchy, maybe some brand information. And once you come up with something that's good, what are the next steps a retailer has to go through right now? Well, I can tell you that I've seen a lot of retailers, no matter what platform they're using, the next step is always export it to Excel for further manipulation of the data, tweaking the pricing, correcting the ending amount so it works for you. And then they have to open up whatever system that they go through, whichever downstream system, and they have to type it back in. And then they have to cross their fingers and hope that everything that they've done is right. Actionable analytics is going to reduce that human interaction. It's going to allow the filtering and the price rounding, and it's going to allow line by line correction so that there's no more Excel. It doesn't remove the user, but it does remove the human error. Whether we're talking about implementing a proper size curve for your retail goods, or we're talking about site, zone, or business unit level pricing, actionable analytics is going to be able to make this a seamless experience, improving the customer experience for your end users. Increasing their productivity, increasing how much time they have available, and most importantly, getting it right the first time. Now, how can we tackle one of the most difficult processes, which is your seasonal exit strategy, right? You're 10 weeks into the season, you have 6 weeks left, you know what your stock is, you know your rate of sale, and you know it's not going to cut it. And you only have so many options to deal with this. You can send it back to the vendor and hope for a rebate. You can send it, you can do some site-to-site transfers, which is by far the most expensive cost, or you can do something even worse, like sending it back to your DC. All of these options are not desirable for any retailer. They're costly. They just kick the can down the road a little bit, or in some cases, you're just leaving a lot of money on the table. So traditionally, what a retailer is going to do first is they're going to enact some sort of markdown. Well, before you got to do that markdown, you have to have machine learning and artificial intelligence in the background to be able to tell you what price you should be at in order to sell what. And it'll optimize your store quantities by taking a look at your size curve across each individual site to better balance. So that way you can have your seasonal exit strategy and get rid of as much of that inventory as possible without having any surplus at the end of the season. Businesses can rely on this, and artificial intelligence can leverage historical data and trend analysis to determine future demand to be better able to both balance and optimize the price to get rid of the goods in time. And like I said earlier, a lot of transactional systems are further marrying in with analytics to be able to better provide information to the end user. And there is no better example than loss prevention. I mean, fundamentally, loss prevention, the entire goal of it is to find a needle in a haystack. Now, how do you find a needle in a haystack? Well, the best answer is to use a magnet. Loss prevention is better leveraged through analytics, and we're going to provide some examples over here. Being able to have user configurations based off whichever attributes that they want, because you're going to have different rule sets for different sites based off purchase patterns and the affinity of each store, the affluency of each store. And being able to find these exceptions is going to be good. So being able to compare business rules and predetermine KPIs while is good, but that ability to define user-defined thresholds is ultimately the way to go. And analytics can crunch this data and compare it against seasonal averages, against consumer averages, against the results itself, so you reduce the amount of false positives. Now, what else is analytics doing over here in context of loss prevention? Well, it's also turning itself into a transactional system in itself. Having this data is good. Being able to do case management from within analytics is the ultimate goal, to be able to provide insight, to be able to tag or flag, build a case, update statuses, and track it accordingly. This is where analytics and loss prevention is really marrying itself together. And we're going to see more and more that analysis will be increasingly embedded in processes, marrying traditional transaction systems to analytical systems to blend one true place to have all your data and your actionable analytics in one spot. And this is another area that analysis, analytics has really made a lot of ground within retailer space. It has really allowed you to understand your customers more. It's done great things such as being able to identify your shopping patterns, see what customers want before they want it, and being able to capitalize on trends. But by far, with the advent of omnichannel experience, you want to tailor the customer's experience within your retail organization every single time to be different and personalized to increase customer loyalty and customer satisfaction. This has led to some systems even being able to create tailored promotions for customers, being able to segment them and being able to promote or create a deal for each segment based off their patterns, based off their demographics, based off their location, based off any characteristic or attribute that you've captured about this data. Even by leveraging big data, retailers can better understand customers' shopping patterns and deliver a more tailored brand experience. For instance, identifying the best and worst performing items can help retailers adjust their strategy so they can stock the products that customers really want in the right stores and at the best price points. Looking at the best and worst performing items enables retailers to offer the products today that customers demand. Which promotions are working, how many customers got their promotions, and insights into your own organization that you really weren't able to have before. This leads us to CRM, our CRM topic. Analytics and CRM has really come together and married up together. There's a lot of analytics that goes into a CRM engine, being able to identify customer engagement and analyze it, being able to segment those customers, being able to have tailored personalized promotions. Knowing your customers is by far one of the most important aspects of the feedback that I've gotten from our partners as an area that is really having a need for room for improvement. And CRM really allows you to get on that personal level with a customer, being able to analyze and kick off personalized promotions for them has really led to growth. And then we have self-service business intelligence. This one is definitely come a long way. Traditionally, data warehousing, business intelligence, and analytics, whichever term you want to use, it's a very complicated process. There's a lot of data to bring in, and it's very complicated to relate that data together and provide the best user experience for clients. And self-service BI has really bridged the gap. I mean, we're no longer at the days where you have to rely on a vendor to bring in certain data into your data warehouse. It's cumbersome and it's difficult and it's very limiting and leads to a frustrating user experience. If you are lucky enough to have an organization where it's an IT-led organization and an internal IT organization, well, you've reduced the cost of bringing in new data for sure into your data warehouse. However, you still have that bottleneck or that queue of requests building up to be able to do this work, and it's often a trial and error and again leads to frustration. Self-service BI is the ability for any user to upload any data set they want in real time and marry that to whatever existing data is within your analytics platform, being able to leverage whichever information is outside of the system. You completely remove this top-down approach of being burdened by a vendor or by an IT-led organization and being able to generate content that they want that's either theirs for their own personal experience or being able to share that data set with whomever they want. And mobile analytics has really come by far the biggest way. 5 years ago, if you asked anybody if they had mobile analytics, they would be happy if they had an email with an Excel attachment of their report. If they were truly good, they had a purpose-built mobile application that accessed the analytics platform and generated the content on the fly, which was good. But you still had a lot of issues of actually being able to run it. True mobile business intelligence leverages the feature functionality of any mobile device to take advantage of complicated features such as geolocation. So that way the reports are pushed to you based off your location. I've seen a use case where a buyer goes to a vendor to make a purchase, and when he opens his analytics application on his phone, the report is already waiting for that vendor, the vendor compliance, the vendor scorecard, a history about the purchase orders, history about the receipts, history about the on-time accuracy or the delivery accuracy, pushed to them, right? They don't have to go and load the reports or play around with switches. The report is just ready. And without losing the complicated feature functionality such as collaboration or communication within the analytics platform, no need to jump around between here and there. And another one of the most impressive features that has really gained traction is speech recognition. You ask a question, you get an answer. Showing me your asking Siri or Alexa or whichever artificial intelligence speech recognition device comes with your mobile platform to tell you generate your vendor scorecard for this quarter. And the request will be fulfilled because the question is understood and translated into a logical request for the analytics platform. This is true mobile analytics that is going to really make a big change in the space for retail analytics. And now we're going to discuss why analytics is a crucial part of your retail organization. Understanding your product is where analytics was 15, 20 years ago, but it's not enough anymore. Leveraging your data set properly, understanding big data, implementing machine learning and artificial intelligence algorithms to catch trends and patterns that you didn't know exist is what's going to make a difference in this quote unquote retail apocalypse. It's what's going to make or break the difference. Having access to easy to understand retail business insights at the most granular level possible enables all retail professionals to have a meaningful impact on their business. As with many new modern tools, retail analytics solutions offer many exciting visualizations, analysis, and even some predictive capabilities. There are a lot of features to discover, and it can be a challenge to assess which ones are most important to your business and which ones are just white noise and distraction. That's why it's very important that any analytics offering that you consider implementing has to be designed to tackle a specific business problem. Whether or not we're talking about identifying trends that you weren't there, whether you're talking about reducing human error and leveraging actionable analytics, you have to have a goal in mind because analytics can be too wide to tackle in one bite. Keep your focus on your end goals. And remember that the analytics solution is a tool to propel you in that direction. Stay laser focused on what really matters to your business is a key component of implementing analytics. And now I'm going to turn it over to Mr. Darren Cantrell over at Cavender's. He's been diligently waiting, and I think he's very excited to talk to everybody. So Darren, whenever you're ready, let me know, and we're happy to give it a go.
All right, thanks, Ellie and team, for allowing me to be a part of your webinar today. And hello, everybody. My name is Darren Cantrell, and I really do appreciate the opportunity to visit with you today about BI Analytics. I live in the great state of Texas, and two of the best things about Texas is the Western culture and barbecue. Ellie can testify to our Texas barbecue. He loves it. I've seen him eat it, and he gets a really crazy look in his eyes when he does eat it. My goal today is to share the best things about BI Analytics from my perspective. As a planner for Cavender's, for those who don't know anything about Cavender's, it is a Western boot apparel retailer. We are a retailer that strongly supports the Western culture. We currently have about 80 stores and operate in 11 states. Before I really get into the bulk of my presentation, I want to share with you a brief history of my career, which will give you some insight into my path to Cavender's and why I'm so passionate about analytics. I started my career in accounting 27 years ago. Yes, I was an accounting nerd, a number cruncher. I like to think of the accounting profession as the profession that plowed the way for analytics. Life as an accountant was great. I was making journal entries, preparing financial statements, and account reconciliations. What could be more fun than that, right? So in 2007, the grocery company that I worked for restructured, and we launched category management. I was presented with the opportunity to become an analyst, and I jumped on board. I love this line of work because it opened my eyes to a whole new world of big data. Through the use of business intelligence, we were on the cutting edge of a new world of information. The experience I gained as an analyst was one of the reasons I was hired by Cavender's in December of 2015. I will never forget one of the first things my boss said to me was, "Get me the data." Well, I found pretty quickly that was not going to be easy to get because the data came out of a reporting system that was no longer supported and lacked the latest advances in technology. In order to provide the analytical reporting that my boss wanted, I needed to get creative. So I learned SQL, extracted the data out of merchandising tables, and put the data in Excel and used pivot tables to build analytical reporting. Does this sound familiar to you when you think about your organization and the hoops you have to go through to get reporting? In 2016, we started our discussions with Gesta about BI Analytics, and watched a webinar just like we are doing today. And in 2017, we implemented BI Analytics. So today I'm going to answer 4 questions for you. First question, why did we choose BI Analytics with Gesta? Second, what were the wins of BI Analytics? Third, what were the challenges post-implementation? And fourth, what are the next steps on BI Analytics? So why did we choose BI Analytics? Like I stated before, our reporting system that we used was not supported and lacked the latest technology. BI provided much needed visibility to properly analyze the business, and BI eliminated many manual steps in reporting. Let's face it, we all have felt that dog-tired feeling after working on a manual report. You can see the picture of the dog on the screen. I've felt like that many times. So what were the wins to implementing BI? First, I want to talk about the general wins. And of course, these will apply to you if you go forward with BI. BI satisfies the need for analytical reporting in a fast-paced environment. BI has drag and drop capability in building reports, and that's something we all want. BI has functionality to create custom formulas so you can make your analytics as robust as you need. BI is very flexible when it comes to designing reports. One of my favorite features when building an analysis is the built-in pivot table functionality. You can quickly change the look and feel of a report in seconds. BI is dashboarding. This is a perfect way to deliver analytical reports to those users who don't want to write their own reports. And BI has the ability to schedule reports to run automatically through BI agent. Now I want to go to another slide here. These are really the specific wins to Cavenders that I want to address. BI serves approximately 160 partners. That's internal and external. This would include merchandising, finance, accounting, retail, warehouse, and our vendor partners. We did not have this kind of reach before BI. And as I mentioned, you can schedule reports to run through the BI agent. This is the primary way that we serve our external partners and some of our internal partners. We currently have about 125 to 150 agents that run each month. One of the biggest wins was the creation of comparability reporting. Before BI, this was a manual process that required data extractions and was updated every week. Now this is easily delivered through BI dashboards and provides greater visibility than the manual process that we had. This is the go-to report for Cavenders to understand how the business is trending. Users love it. Another huge win for us was the automated data sharing with vendors. Before BI, this was a manual process done on a much smaller scale. We now have automated this process and we deliver more detailed information and have a larger reach to our vendor community. This has paid big dividends for vendor appointments because of the insights they're delivered. Another win for us was building store sales and inventory reporting into our BI dashboard. This is just a type of reporting that is under constant review by the buyers and highlights areas of opportunities. Once again, before BI, this data was extracted manually once a week and had limited filter selection. Now with the help of BI, this report is more robust with expanded filter selections and is always current. Another win to having BI was the ability to be predictive in sales and inventory for major events such as rodeo. The Houston Rodeo is the biggest rodeo in Texas and really an exciting time for everyone. And having predictive reporting helped us to be more prepared heading into rodeo season to ensure inventory levels were sufficient, properly allocated. This report is generated through a BI dashboard, and so it can easily be created over and over again. Another win to having BI was it enabled us to be more proactive in holding our vendors accountable through product delivery reporting, and that's handled through automated reporting. Again, that was a manual task done prior to BI. Another big win was in the area of retail operations. Prior to BI, we delivered a small assortment of reports through Vision Answers. Now we automatically deliver much more robust reporting that provides insights that were not visible to our store partners in the past. Another win was automated inventory reporting to the warehouse, which has provided visibility over inventory adjustments. And of course, you can apply certain thresholds to that. So it helped them identify possible theft problems. And this type of reporting was not available prior to BI. Another win was automated delivery of reports to finance accounting that contained multiple metrics specific to accounting to help them evaluate inventory investment, liquidity, and risk. Before BI, this type of reporting was difficult to produce. So really the bottom line is this kind of visibility leads to better collaboration, improved product assortment, minimizing markdowns, enhances inventory controls and planning. So these are the wins that we experienced. So what were the challenges post-implementation? So tools are only as good as the effort that the user puts into them. So if you go forward with BI analytics, you must dedicate some time to development and training of BI. If you don't, it will never perform to its capability. Now, Jesta will be there to support you, but ultimately, you must take ownership because you know your business. And when it comes to introducing something new, people don't like change. Over time, though, you will be able to prove the benefits to the users. So sometimes when you look at this slide, I want to go back to that previous slide. I want you to notice the picture of the steer wrestling. Sometimes it feels as though you're wrestling a steer. But in the end, it can be a fun experience, so I want to point your attention to the clown, the rodeo clown. So in the end, BI can create a fun experience for you. So what are the next steps in BI? Well, we want to continue adding more users and training. We want to continue to be innovative in our understanding of our business. Recently, we assigned style characteristics to each of our styles. Information like this will allow us to understand how boot skins are trending in footwear, for example. We can then be more proactive in sorting the stores to what the customer is actually looking for. And of course, we want to explore additional predictive reporting. We want to look at exception reporting, promotion reporting, and then lastly, consumer and shopper intelligence. So in summary, BI will give you much more visibility than you have today. It will help you analyze your business quickly. It serves multiple business partners, provides automation of reporting, eliminates manual steps, contributes to the bottom line through fact-based insights, and allows you to continue to be innovative and creative. At Cavenders, we call ourselves a small but mighty team. We are mighty because of the talented people that we have, but BI has made us stronger through the use of analytical insights.
Darren, thank you so much. So happy to have you part. And you're absolutely right. I really do miss that Texan barbecue. Now we're going to take a look at some of the different functionality that we were talking about before. And that way we can take a better understanding at the actual implementation of some of the complicated concepts that we were talking about before. So here we're taking a look at a specific dashboard that's going to allow us to understand further how we can take a look and understand our the different concepts that we were talking about. So this is a screen that's really been overpowered to help you create and action different pricing. As you can see, it's doing some standard stuff that retail analytics traditionally is expected to do. The first one being filtering in on a list of products and filtering through on some KPIs. In this case, I'm planning a markdown. I'm planning a 25% markdown. I'm planning to create that markdown in 3 weeks. And to make sure that I'm not just grabbing every product within my hierarchy, I'm specifying some KPIs that I want to make sure that are key for better style candidatures, such as its sell-through being a little bit lower and its weeks of supply being within a certain range. From here, some of the actionable intelligence that we can do is just simply a matter of, once I'm happy with this list, I don't want to have to export this list in Excel and type it into my system. We can go ahead here and actually create what we call a style color list that can be leveraged in the other system to recall these list of styles. Now, this could be really much a big time saver. No one really likes exporting to Excel and playing around in there and retyping it in. Just being able to create a style color list, whether for further reporting purposes or for recalling in downstream systems, is good, but it's not great because it's only a list of styles. We lose the capability to remember the pricing that we want. So that's still a step that we're going to have to do. So we took it a step further, right? Now we're happy with this 25% markdown and we're okay with most of these styles. If we weren't, we could just simply go ahead, click and remove some of these styles, but perhaps 25% isn't where we want to be. We understand the impact of this price change because we can see the cost of the markdown, the change in the price, the new price and the new margin. However, we're not happy with some of these prices. So we're actually able within the analytics system, go ahead and edit these prices. This is going to launch us into what we call our designer mode and give us the capability to override each price. So instead of going 25% on this given column, we can go ahead in here and we can make this, I don't know, $19.99. And just by doing that, we see the report update in real time to give us the new difference, the new cost of the price change, and the new margin. We can go ahead and find something with a little bit more beef, and we can go ahead over here and make this $119. And we'll see the impact right away. We saw the old margin, we saw the new margin. And once we're done making our changes in here and we're happy, we can go ahead and complete this price change. And now we have a more accurate pricing that we desired. We were able to do line by line exceptions instead of a blanket markdown of a certain percent. And now we're ready to go. But we're still at that problem where we have to go ahead, export, and create the price change. Well, from here, we actually have real-time integration to create this price change and a lot of flexibility in there. You can go ahead and specify a start and an end date if you want it to be a temporary price change. If this is a permanent price change and you want to see the hit on your stock ledger immediately, just leave the end date blank and it will be a permanent price change. You can give it a description if I wanted to call this my Black Friday sale. Perhaps if it was a Black Friday sale, I'm probably going to want to make it 1 day. I can specify the buyer code. All the buyers are brought in from the source system and I can specify who's doing this price change. I can give it a reason, or if I want, I can even specify which price status I want. To make it exceptionally complicated, all the rounding rules are brought in. So even if you have those 25 or 50 lines that did the 25% price change and you wanted to preserve your rounding rule because that's very indicative to a retailer as to the price status, you could go ahead and say, oh, it ends in 95 cents or it ends in 99 cents, whatever it may be. And once you go ahead and confirm this, it is immediately executed downstream and the price change is there waiting to go. Another example of a phenomenal actionable intelligence example, and you can see the notification came up even with the price change identifier, so you can easily recall it in the source system. But now we're going to talk about how to make an intelligent buy. This is a phenomenal way that we can leverage actionable analytics to see exactly what's going on. So we're going to start by picking off a certain brand, a certain department, or if we wanted to, a certain brand. And it's going to bring up a list of styles. One of the advancements in analytics is the proper placement of style characteristics. More often than not, a lot of reports have this plethora of drop downs and switches to refine your products, often them having invalid combinations, and marrying those those switches together is often an expensive and performance drag. So this new way of doing analytics is to show you the drop downs that only you're concerned with. So now that I've selected televisions, I'm only going to get the characteristics of televisions. If I wanted to go ahead here and pick a given vendor, one of the other phenomenal things that's happened is the advent of Google style search. So if I go over into brand and I wanted to say, show me all my LG, I no longer have to go through all the list. I have my Google style search that as I type will suggest to me what I want. But We're just going to go ahead and take a look at everything because it's fun. And now that we're here, we're going to make an intelligent purchase. You know, anyone who's used many retail inventory control system knows that updating the cost of a product tends to be more often than not a lengthier process that requires several steps of approval. Perhaps you got a rebate from one of your specific vendors telling you, hey, I've got an overstock of these products, just take it at this price and take it off my hands. Well, you're not going to go through all the hoops, bells, and whistles for one single buy. Analytics has the ability to either respect those rules or allow the user to override them, completely configurable through security. So if I wanted to stock up on 1,000 of these TVs that I'm seeing over here, this projector, I can go ahead and do that. And I'm going to see immediately the total cost, the current cost, and the current retail. So I have a complete understanding of my buy. If I have a price override exception, I can go ahead, update that, and then we'll see exactly how everything matches together. We see the current cost, our new cost, how much the total purchase order is along with the current retail. And you can go ahead and do these for as many or as little products as you want while still being able to leverage the analytical aspect of visibility about what you have on stock, what you have on order, how much you have on hand in the warehouse, how much you have on hand in selling stores, being able to identify the sales trend and so on and so forth to be able to let you make more intelligent purchasing decisions. Now, once you're done, we still have that problem of exporting to Excel, and I have a sneaking suspicion that everybody knows where I'm going with this because the button is pretty obvious. You can go ahead and create that purchase order from within the system, and it will be immediately and effectively created, waiting for approval if you so configure, and that way your purchase order is ready to go with no error, no mistake. You get the purchase order transaction ID communicated to the end user through our notification system, so that way all human interaction and error is made. You can update the purchase order later on if you want. You can correct it from within the screen if you so choose, but you have that flexibility. There's no more bouncing between two systems. It's a seamless, tight integration that is there and just waiting to be leveraged. And at this point, I don't know if we had any questions that came in. I think we had a good one. So we had a question, what are the pitfalls and challenges when implementing an analytics solution? Well, that's such a good question because there are so many pitfalls. There's so many risks about implementing an analytical solution. The first pitfall of it, implementing an analytics solution is often compared to flying a plane. The most important part is you have to know where you're going. Make often corrections whenever it's needed. You cannot launch a project and just see where you are at the end. You have to be able to identify gaps when you're going. You have to be able to make corrections as needed to stay on course, and you have to have a clear understanding of how to get to where you want to go. Defining your business goals is by far the most important aspect to properly implementing a business intelligence solution or analytical solution. Otherwise, the volume of data is just going to make you drown in the ocean. And with that, I think we're out of time for all the questions. At this point, I'm going to turn it over back to Anna, as she has a few points to address.
Thank you, everyone, for joining us today. If you have any questions and you'd like any information on our solutions for retail analytics, you can visit justis.com. You can also request a complimentary assessment on your analytics needs by writing to us at sales@justis.com. And lastly, if you are attending NRF's The Big Show in January in NYC, visit us at booth 4655. For your information, we'll be sending out today's recording by email in case you'd like to revisit any points. And this concludes the webinar for today. Thank you again for attending, and we hope to hear from you soon.